We have the news regarding China's growth, and it's nowhere where it should be. But what does this all mean for the precious metals? We'll be asking Peter Hug on For Pete's Sake coming up right now. It's always a good Monday when I'm with Peter Hug. Peter, thank you so much.
You're welcome, Daniela.
All right, so let's start by talking about that news from China, 7.6% growth, and you said in your morning commentary that it's nowhere where we should be. What does this mean for the precious metals, Peter?
Well, I think, China is going to continue to ease monetary policy along with the Europeans. And I think the Fed may surprise us and may come up with an announcement this week that'll catch the market off guard.
Right. So China also holding an important meeting Wednesday with their cabinet where they're expected to announce more fiscal stimulus. Are you surprised?
No, I think it's just a natural occurrence. I think the Chinese will continue to maintain fiscal stimulus in their economy until they get their growth back up maybe to 8.5%, 9%, which probably won't happen until next year, but they're certainly not going to tighten at these levels.
All right, Peter, let's talk about the big news of the week, however. Bernanke slated to speak tomorrow. Is that what's causing the market to react right now?
I think Bernanke should do nothing, but I think he may do something. The precious metals have bounced off support now 3 times. Friday would have been the opportune time for silver to break down through the 26.30 level, and it touched it. And as soon as it got there, the traders came in, bought the market, and rallied it up $1. I think U.S. growth is slow, and I think it's likely now that the Fed may act. I think they shouldn't, but I think the Fed may surprise the market and create some extra stimulus into this market throughout the summer ahead of the U.S. election.
Okay, so you don't expect really any big news to emerge tomorrow, but on that topic of growth in the U.S. retail sales coming out today, and not too rosy there either, Peter.
Right. I think what you're seeing is whenever there's bad economic numbers coming out, the market is reacting positively for the metals in anticipation of the Fed doing something, another easing or stimulus program in the market. And I do think, whereas a couple of weeks ago I thought the Fed was done until after the election, I think the Fed may surprise the market.
Peter, I spoke with an analyst last week who said he wouldn't be surprised to see gold go as low as $1,300, but could see a breakout any day, wouldn't be surprised. And I know offline you also were telling me that you wouldn't be surprised if gold just had a sudden breakout, right?
Yeah, I think the risk, if I was a trader, I wouldn't be short this market. I wouldn't be aggressively long, but I definitely wouldn't be short this market. I'd play it from the long side. I suggested this morning that gold should be bought at support. It tested 1578, bounced right off it. So I do think the risk is to the upside. Logically, the markets and fundamentally the market should go lower, but this is an emotional market, and I think this market could surprise on the upside. Okay,
so again, key figures you're looking at for gold, Peter?
Again, if it gets through 1620, I think a test of the 1680, 1700 level is certainly within the realm of possibility. If support fails, 1550 fails, there's major support at the 1527 level. It has to break down through that support before I see it in the 1400s.
As always, thank you so much for your thoughts, Peter.
You're welcome, Daniela.
And thank you for watching this edition of For Pete's Sake. You can email us at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.